Hey guys, RC Peck here. So good to have you here. I want to talk about three things specifically on this video. One, how words and narrative can get you in trouble. Two, how caring about the wrong things can get you in trouble. And three, how really focusing on price is, I believe, the thing that most people are looking for to solve their problems with growing their portfolio and answer their prayers. So let me jump over here. And I'll just start with a price chart of the S&P 500. So before I jump into this, I want to show you this price chart. It's basically the coronavirus cases each day on a 7-day moving average. So just compare the US. So the higher this goes, the worse a country is managing the outbreak. The flatter it is, the better. So there's China at the very, very bottom and US at the very top. I just want to take the worst and the best. So China, from a large country point of view, has managed the outbreak best, and the US from a large country has managed it worse. The first case was registered to the World Health Organization on the 31st of December. Since then, the S&P 500 is up, let's call it 15%. So 15% since the first case was sent to the WHO. This is the Chinese stock market right here. And they're up about 10%. So China up 10%, US up a little over 14%. So people deriving one piece of information and therefore saying the other one is better is such a big mistake. The stock market is forward looking. Humans look kind of straight down in front of them. So yes, China did appreciate, there were other names on there. France was one of the names on there, and you can see how France probably has handled the outbreak better than the U.S. and their stock market. I'm looking at indexes here, guys. Their stock market's down 8%. So just looking at three on here, the U.S., China, and France, which is the second best country that's managed this. France is actually down 8%. 8% since the first case was registered with the World Health Organization. China's up 10%, and the US is up over 14%. This price chart, sorry, it's not a price chart. This chart, which is getting pulled out and dragged out all over the place, most people are being like, get out of the US, get into China, maybe France, maybe Italy. And it's a huge mistake. They're making huge assumptions that how someone manages this impacts this thing over here. And it's actually not true. It's not true. And I bet you there's been a lot of big box advisors that are like, let's get into China. Let's get into Europe because they've handled it better. And then their clients like, yeah, that makes sense. The problem is price charts don't agree. And so the frustration comes from when you think you're doing what's best for your money, but actually it's unnecessarily slowing down the growth of your money. So this is the first, I keep saying price chart, but this is the first chart I really want to highlight how narrative over here doesn't translate to growing money over here. The next one I just want to show is voter turnout. So in the US, we had the highest voter turnout since I think 1907. I love the idea of voter turnout. I actually believe everyone should vote. There's pros and cons to that. But we had the highest voter turnout. And I'm going to go back to the S&P 500. I'll just stick with SPX. November 9th was the day. It was a Monday. I'll go and zoom in. We'll go find November 9th on here. And November 9th was a Monday. That Saturday was when I believe the election was called, and I believe the market thought the election was called. And then this gray vertical line that you see here is the first trading day. So the first trading day after the election was called, notice what happened. Slightly down, broke up, slightly down, and then broke up to new lifetime highs. So this is listening to the market say, we're good with who won. We think we know that there's a clear winner because the market hates confusion, hates doubt. And the fact that it moved up after that Monday, when the market opened on Monday, the announcement came out on Saturday that Biden had won. the market moved up. And since November 9th, it hasn't been that much time, but the market's up almost 5%. This is the index. So if you add in dividends reinvested, it's up a little bit more than that. But the market's basically saying, we're good with who won, we're moving on, and we're moving higher. And this is a problem if people stick with the narrative of who should have won, who's good for the economy, who's good for the market. The market already voted. It's done. The market voted. It says it was a clear vote. It was a clean vote, and it has moved higher. By the way, the market does not move higher if it's confused about the future. It doesn't. It doesn't. Behind this black line is about 700 million people. The richest 9% of the planet are the people who are voting. And this is a line that represents them. This is something that when I train people, I train them over and over again. The people behind this are the richest people on the planet, right? This isn't about being fair or not fair. It's simply those 9%, that's 700 million people saying, yep, we're good. We're looking at the future. We see the answer to the Biden-Trump thing, and we're buying more, right? So you can ignore price, but the beautiful thing about price is it never gets restated. Right? 6 months later, it's not being adjusted up or down. That happens all the time with economic data. It definitely happens with price to earnings ratio, price to any other ratio. All that stuff is always getting restated. Price never gets restated. And just a bit after the Biden win, the market broke out to new lifetime highs. So the second is just the incredibleness of the voter turnout. It was very clear that this was a strong and important election to this country because of the biggest turnout in 113 years. Which to me makes it an even stronger win, regardless of who would have won, because it had the highest turnout in over a century. The other thing, which is not on this price chart, which I just love, is every state in the United States has a different way of counting their votes. And at first I was annoyed by this, but then I was like, this is actually brilliant, because if there's 51 ways, the District of Columbia, if there's 51 ways of these different states and provinces or municipalities of voting, you can't hack it. But if there was one system across the whole country, that one system is very fragile. But 51 systems is not fragile. And I believe the stock market knew that. And that's why on that Monday when the market opened, it said, great, it's clean. It's the United States, 51 different ways of counting votes in 51 different states, District of Columbia. We're moving higher. Also, too, it wasn't just the U.S. watching the votes. More importantly, here's November 9th here at the crosshairs. That's November 9th right there. This is MS World. This is an index. So this is the All World Index X the U.S. The world X U.S. liked the outcome even more. And in fact, look at this. The world broke out on the 6th. It broke out on that Friday. The world knew that Friday that there was going to be a clear winner. I don't know if it knew whether it was going to be Trump or Biden, but it knew there was going to be a clear winner. It broke out and it has just moved up. But on the 9th of November, it closed right about here and the world is up 9%. So the world really likes the vote in the sense that it's a clear vote, it's a clear winner, and they're fine with Biden. When you are taught to study price, you eliminate all of the BS in your life when it comes to investing. Okay, I've got one more thing I want to show you. And if I have not triggered anyone yet, this may be the one that triggers people. Let me do this. Let me zoom out a little bit here. Okay, there we go. The stock market, actually, I'm going to put up SPX. It doesn't really matter, but I'll put S&P 500 index. So here's the S&P 500 index. I'll use the word tragic. It's probably not a tragedy in the actual dictionary definition. The stock market really only cares about the top 10%, generally speaking. Obviously, if the bottom 90% are waging war, actual war, it cares. But the the stock market is for the top 10% of the world. I didn't make the rules. I didn't deal the cards. I didn't make up the game. I'm simply pointing out that those 700 million people, they're the ones that vote. And if they're doing well, that's about the top 9% of the globe. If they're doing well and they see what they own doing well, then the stock market's gonna do well. It's super sad that the bottom 90% almost don't participate in the best wealth machine ever. That's how it is. I'm not making a political statement here. The last chart I'll show is, I think, a very sad chart. It's for sure, I don't know if it's the saddest chart, because the first one I showed was the 7-day rolling average of new corona cases. This is probably sadder. US Google searches for food pantry near me. To me, this is the saddest chart for a couple reasons. It's accelerating. But notice that something happened in 14, 15, 16. We started getting a hockey stick curve of this moving higher and higher, and that's sad. That means the bottom 90%, it's getting worse and worse for them. And maybe this is really a price chart of the bottom third, but that is accelerating. That is incredibly sad. Now look, the stock market knows it's going on, because I believe the market knows more than anyone, but the stock market's still coming back to, look, the Fed expanded balance sheet. We'll probably get a second economic stimulus package. And it's looking to that. The more you understand price, the more you study price, the more you become a student of price, the more you pray at the altar of price, the better your portfolio is going to grow. When you study price and you learn how to read price charts, that's your filter, right? That's your filter of saying, should I listen to my brother-in-law? Should I listen to Jim Cramer? Should I listen to RC Peck? Should I listen to anyone? You are trained to go look at the price chart and learn that your portfolio goes up and down with price. Thank you guys so much for being in my world. It's not my last video. I feel like I'm wrapping up the year. It's not. We have a couple more videos before 21 starts. But we are definitely marching into 21 with the price just moving higher. So thanks for being in my world. Please go ahead and hit the like button. YouTube loves when that like button gets clicked. Thank you so much, guys, and I will see you on the next video. Okay, bye. Hey guys, if you liked this video, you're absolutely gonna love our trading service. And if you've tried trading before and it hasn't worked, or you've struggled, it's because you're making one of 7 mistakes, I guarantee it. And after the click, I'm gonna show you exactly what those 7 mistakes are. All right, I'll see you there.